Hello and welcome to the Sustainable Materials Management webinar series, a joint effort between the National Recycling Coalition and the Pennsylvania Recycling Market Center. My name is Wayne Bowen. I'm the program manager for the Recycling Market Center and will serve as your moderator today. Today's webinar topic is an update of the recycled metals commodities markets, and our presenter today is Joe Pickard from ISRI, who I will introduce in a moment. We're going to have a Q&A session at the end of the presentation, so if you have a question or comment, you can use the Q&A feature located on your control panel on your screen. Please note that an edited version of this webinar will be made available for viewing via YouTube links on the National Recycling Coalition and PA Recycling Market Center websites. And also please note that the Pennsylvania Recycling Market Center, its affiliates and funders, and the National Recycling Coalition assume no liability resulting from the use of any information provided during this webinar. This webinar is only provided as an informational tool and no discrimination is intended and no endorsement by these organizations is applied. And now I'm going to introduce our presenter. Joe Pickard serves as the Chief Economist and Director of Commodities at the Institute of Scrap Recycling Industries, also known as ISRI, where he's conducted research and analysis on commodity and scrap market developments and the key economic role that recycling plays both in the US and abroad since 2010. Joe regularly provides economic and recycling market updates to ISRI members, industry associations, policymakers, the press, and other external audiences. In that capacity, Joe is regularly interviewed by major print and other media outlets, including the Wall Street Journal, the New York Times, the Economist, Bloomberg Businessweek, the Chicago Tribune, Washington Post, PBS Frontline, 60 Minutes, ABC News, and more than 30 US radio stations. As a current member of Industry Trade Advisory Committee number 5, he serves as an advisor on scrap-related trade issues to the U.S. Commerce Department and the Office of the U.S. Trade Representative. Joe also serves as a general delegate to the Bureau of International Recycling's Committee on Stainless Steel and Special Alloys. He previously served as the economist for the Internal Copper Study Group in Lisbon, Portugal, and as a research analyst at Slayton and Associates in Alexandria, Virginia. He previously worked in the research and environment departments at nonprofit organizations, including the Urban Institute and the Pew Charitable Trust. He's a current member of the American Economic Association, National Association for Business Economics, and the National Economist Club. Joe holds a master's degree in economics from Virginia Tech, a bachelor's degree in political science from Loyola, and also studied at George Mason University and KU Leuven, Belgium. And I'm going to turn that program over to Joe.
All right, thanks very much, Wayne, and thanks for the invitation to give an update to the group. And good afternoon, everyone. My apologies for the long bio that you had to sit through, but look forward to giving you an update and to taking any questions that you might have regarding specifically what's going on with the recycled metals markets. But I'm going to start with an overview of sort of the economic developments, including the relative strength of the manufacturing industry in the United States and how that's impacting supply and demand for primary and secondary metals. I think it would be fair to say that things are looking considerably better than where we were this time last year. Obviously, we've had a surge in non-ferrous and ferrous commodity pricing here in the first quarter of 2021. Expectations are positive going forward as well. And I'll delve into some of those specific market dynamics as we go along. In addition to some of the challenges, certainly that recyclers are still facing. COVID obviously has been the major challenge, not just from an economic, but from a public health perspective as well, of course. But other issues that our industry continues to grapple with include problems on the transportation front, including containers and the trucking sectors. Also, challenges across the labor markets, challenges hiring and retaining qualified employees at the various recycling facilities and scrapyards. But like I say, the outlook is generally positive, and actually analysts have been upping some of their economic projections for 2021. For those of you following along on the screen, this chart shows the economic projections from the Federal Reserve for 2021 through 23. including their projections for real GDP growth and the unemployment level. These numbers actually are a little bit low compared to some of the other analysts, which I'll talk about in just a sec. But for 2021, the latest forecast from the Federal Reserve is for 4.2% real GDP growth this year, and for the unemployment rate to continue to come down to about 5% on average for the year, down from about 6.3% currently. And in the latest, most recent statement from the Federal Open Market Committee, the Federal Reserve Chairman had this to say: the COVID-19 pandemic is causing tremendous human and economic hardship across the United States and around the world. The pace of the recovery in economic activity and employment has moderated in recent months, with weakness concentrated in sectors most adversely affected by the pandemic. Given the positive news, I think, on the vaccine development and the number of vaccinations that are taking place in the country today, even though we still, of course, have astronomical numbers on the number of fatalities from COVID, I think the markets have been reacting positively to the vaccination news, and that has informed some of the economic projections. For example, Goldman Sachs recently raised their GDP growth forecast to 6.8% for 2021 for the United States. That would be the fastest rate of growth since the 1980s, actually. But COVID expectations certainly have shaped expectations from not just from investors, but from the business community. On the screen are the fourth quarter projections from 2020 from the CEOs surveyed by the Business Roundtable as to when their business conditions are going to fully recover. And as you can see, 41% of respondents expected their businesses to recover in 2021. 27% were expecting that until 2022. And then 6% were expecting not till 2023 or later. I suspect those numbers with the first quarter survey that the Business Roundtable will do, I would expect those to show considerable improvement, again, based on a number of factors, including the strength of the industrial sector in the United States and the manufacturing base as well, which has been real bright spots, generally speaking, in this recovery phase that we're in right now. The latest industrial production numbers from the Fed showed for both industrial production and for manufacturing output, gains of about 1% in the most recent data. And that builds on gains that we saw, certainly from the depths of the COVID impact back in the second quarter of 2020. I'd like to take a look also at the Institute for Supply Management's manufacturing PMI reports. Those are especially interesting, I think, for metals demand across the manufacturing space, which of course constitutes the consumer base for scrap metal recyclers. And the latest numbers on US manufacturing PMI for January showed that PMI actually decreased somewhat from 1.8 percentage points to 58.7 in January. Any number above 50 is indicating expansion in the manufacturing sector. And so even though the number was a little bit softer in January, that's still well into expansionary territory. And just wanted to give you a sampling of what some of the survey respondents from the ISM had to say. From the computer and electronics products sector, supplier factory capacity is well utilized, Increased demand, labor constraints, and upstream supply delays are pushing lead times. This is more prevalent with international than US-based suppliers. From the extremely important transportation equipment sector, the survey response was very strong demand with limitations in supply to meet increased demand. From fabricated metal products, our current business demand is going way past pre-COVID-19 levels, which is, I think, uncommon as compared to some other sectors of the economy. From the machinery sector, we hear this across different aspects of manufacturing base, huge logistics challenges, especially in getting product through ports and in getting containers. We're seeing significant cost increases in logistics and raw materials. And then last one, just to point out from primary metals, the survey response was business is improving, but we're still struggling with a shortage of available labor. And again, that's a recurring theme. When we look at the labor market data from the US Labor Department, we see that for initial claims, for example, levels remain extremely elevated. You know, if you look at the pre-COVID level, initial weekly unemployment claims were typically hovering around 200 to 250,000. They obviously peaked and spiked near 7 million, which was unheard of back in April of 2020. Today they've come down, but still hovering around 860,000 from the last initial unemployment claims report, which again, much better than where we were at the spike, but significantly elevated from where we were pre-COVID levels. And we see that in the monthly employment situation report from the Labor Department as well, where we have seen employment gains, but those gains have been slowing in recent months. Similarly, the unemployment rate has certainly come down from peak levels around 15% to about 6.3% currently. But again, the improvements that we're seeing in the data from the labor market are moderating. And that's reflected, I think, in a lot of the situations for scrap recyclers as well. One other issue to point out has been supply chain issues, which have been both supportive and cause for concern for the metals industry broadly. Certainly, I think we're still working through some of the supply chain interruptions that we saw back in 2020, and that's generally been supportive for steel prices and for other commodity prices as manufacturing has ramped up and as supply chains have been struggling to meet that demand because we've had a number of supply deficits for key raw material inputs. That's the positive side in terms of impacts on pricing and demand, but at the same time, some shortages that we've seen for key inputs into manufacturing production have also started to have a negative impact on manufacturing output. And many of you may have been covering probably or seen some of the stories specific to chip shortages that are impacting automobile production in the United States. The Wall Street Journal was reporting on how those chip shortages are impacting automakers' output and employment as well, because semiconductors are so critical for modern vehicles, but also are in short supply. And those supply chain issues were also reflected in the PMI report, which said significant supply chain delays, raw material shortages, and evidence of stockpiling at goods producers pushed input prices up. This is for January. The rate of cost inflation was the fastest since April 2018, with firms raising output charges at the sharpest pace since July 2008 in an effort to partially pass on higher cost burdens to clients. And we certainly saw those rising prices that have been accompanying expectations for faster growth, not just in the United States, but globally as well. The International Monetary Fund is projecting that the global economy will recover 5.5% this year from a 3.5% contraction in 2020. Important to note here the expectation that emerging and developing economies are expected to grow much faster this year than the advanced economies. Emerging markets are expected to grow 6.3% as compared to just over 4% growth for the advanced economies like the US. And that has important implications for the global flow of scrap metal as well. And I'll talk about some of those scrap metal trade flows a little bit later in the presentation. But suffice to say, the IMF is projecting that total global trade flows in 2021 are going to increase more than 8%, following a 10% contraction in 2020. And that's significant for the recycling industry here in the United States, because even though the vast majority of what we process also gets consumed domestically, typically the split is about 70% of what we process gets shipped to domestic manufacturers and about 30% gets shipped overseas. But even still, that overseas demand has really important market implications. And when we look at the manufacturing PMI, the composite PMI numbers for the world, the JP Morgan Global Composite Index has been slowing, decreased to 52.3 in January. But again, that's still above the 50% threshold separating contraction from expansion. According to JP Morgan, the rate of global economic expansion eased for a third month in a row during January. Output rose at the slowest pace since last July as new business growth slipped. Business maintained a positive outlook, however, allowing for a further slight increase in employment. And I think that's the key part, is that for most market participants, not just in the United States, but globally within the manufacturing space, most are maintaining a positive outlook, even though we've seen a little bit of softness in the data lately. And that positive outlook on manufacturing, on expected economic growth in developing and emerging economies, and some of the supply chain issues that I just discussed have certainly contributed to the surge that we've seen in metal pricing so far this year, and particularly this week for the non-ferrous metal prices. And here you can see the year-to-date increases, which are quite remarkable considering the fact that we're still in late February. The year-to-date increases that we've seen across the major base metals at the London Metal Exchange this year. Tin prices have surged about 33% higher as of this morning. Copper prices are up nearly 18% year-to-date, and have been trading above $9,000 a ton this week, which, as many of you have seen, it's the highest levels since 2011, and has gotten a number of not just industry analysts, but market participants as well, sort of convinced that we are in the middle of another super cycle for commodities, based on what we're seeing for the non-ferrous, but also for ferrous metal prices as well. Just to round out the year-to-date price performance for the major base metals, nickel prices year-to-date are up about 16%, and we're trading above, I think, $20,000 a ton yesterday. I think they may have slipped a little bit today. Aluminum, lead, and zinc have not performed to the same level as some of the other base metals, but are still in positive territory year-to-date, including an 8.5% gain so far this year for aluminum prices at the LME. When we look at all important steel markets, not surprisingly that those prices have surged as well. Several factors have contributed to the strong start to the year on the ferrous side of the business, including improved demand for manufacturers, diminished competition from steel imports, depleted steel and scrap inventories, and the corresponding need for restocking. As a result, ferrous scrap market participants were reporting business conditions in December and January were some of the best they had seen in recent years, as volumes were up and prices were certainly rising, not just for finished steel, where we saw hot rolled coil prices trading above $1,200 a ton last week, but also for ferrous scrap prices as well. And I think some of the disparity that we see in terms of the price gains on the steel side versus the price gains that we've seen on the ferrous scrap side do get back to the changes in trade flows that we've seen. For example, in 2020, US finished steel imports were down about 21%. So imports of steel coming into the US down about 21%. Meanwhile, imports of ferrous scrap coming into the United States were up about 7.5%. So we've got less finished steel coming into the country, but more ferrous scrap coming into the country. And that's contributed, I would say, to the discrepancy that we've seen in some of the pricing. But across the board, ferrous scrap prices have been extremely strong. And we've seen that, of course, with respect to scrap pricing. And these are the producer price indexes that just came out for the major scrap commodities for January. So you can see for aluminum-based scrap, for example, for the month of January, as compared to December, prices were up 9%. But if you look at the year-on-year comparison, aluminum scrap was up 37% compared to January 2020. Copper up 29%, iron and steel scrap up over 50%, and non-ferrous scrap overall up about 24% as compared to the same time last year. And as part of the reporting from fast markets and from other sources, we wrote in the market, our ISRI market report last week. And if you guys don't get the market report and would like to be added to our distribution list, just shoot me an email. I'd be happy to add you on. But we were at the expected return of global auto production to more normal levels, and China's recent opening up to imports of high quality and recycled ferrous scrap are two important trends which signal favorable market conditions for the metal recycling industry. That's from Alistair Field, SIM's Chief Executive Officer. And the positive volumes and certainly the positive pricing has helped to underpin corporate results as well. SIM's underlying share of results from SA Recycling, for example, its Orange, California-based joint venture, was $24.4 million, in contrast to a $1.3 million loss during the corresponding period in 2020. The company attributed the reversal to sky-high ferrous scrap prices, which hit $490 to $500 per ton in December and January, amid supply shortages after COVID-19 pipeline shutdowns on the east and west coast of the United States. So similar to what we're hearing from other companies. And certainly export demand has been critical, especially from Turkey on the ferrous side of the business. I want to turn just a little bit and do a review of overseas demand for US scrap in total, but with a focus on the metals, of course, and actually where we're seeing growth. Last year was kind of a strange year in terms of the export data from the United States. This chart shows total scrap exports, which includes ferrous, non-ferrous, but also the non-metallics like paper and plastics and rubber and glass. By volume, our US scrap exports decreased 8% last year to about 35.1 million metric tons. But if you look at it on a dollar basis, our scrap exports in total, again, were reportedly up 8% to nearly $20.8 billion. A large part of that dollar-based increase was the increases that we saw on precious metal scrap prices, which are, obviously not large in volume, but because of the very high per unit values can have disproportionately large impacts on the value of our scrap exports. But again, in volume terms, in quantity terms, our exports were down 8% last year. And let's take a quick recap of export demand across the major metals last year. Our ferrous scrap exports, and this excludes stainless and alloy steel scrap, were basically flat. They edged up a little bit to just under 16 million tons. Not too surprisingly, Turkey, along with Mexico and Taiwan, were still the top three markets for ferrous scrap last year. Shipments to China, which have been a hot topic of speculation whether they would start to pick up again, ferrous scrap shipments to China at least were negligible last year. Ferrous scrap exports to our largest export market, Turkey, exceeded 4 million metric tons. That was up 3% year on year and again, a supportive feature for the ferrous scrap market. This chart shows the major destinations as ranked by the 2020 volumes. Turkey, Mexico, Taiwan, followed by Malaysia, Bangladesh, Vietnam, Canada, Pakistan, and India. There's been some talk that maybe some of the trade figures with Malaysia on the ferrous scrap have been inflated. There may have been some misreporting of non-ferrous scrap as ferrous in the Malaysian trade statistics. But again, Southeast Asia remains a major source of growth as materials increasingly sent to those Southeast Asian markets before final consumption, in many cases in China. And I'll talk a little bit about Malaysia at the end of the presentation. This is the trend in copper scrap exports from the United States, down 11% by volume in 2020 to about 776,000 tons. I think the trend is pretty remarkable when you look at this chart. China, represented in red, as we like to do, in these various bars showing the data from 2016 through 2020. In 2016, China's share of our copper scrap exports was about 70%. That was dropped to about 10% in 2019 and edged back up to about 15% in 2020. And you know, market participants and ISRI members that we speak to are reporting that there is material moving copper scrap that meets the higher quality thresholds into China currently, even though some of the inspections in China have reportedly been somewhat inconsistent. Shipments to Malaysia were still our largest single export market for copper scrap last year, even though they decreased 20% by volume to about 177,000 tons. Take a quick recap of the aluminum scrap exports from the US, and the story is quite similar. If you look at the chart on the left-hand side of the screen for 2016, you see just how massive a share China had back in previous years of aluminum scrap demand from the United States. That has largely been replaced by other markets, including Malaysia, India, South Korea, and others. So overall, our aluminum scrap exports slipped about 0.8% last year to 1.85 million metric tons. That includes UBCs and remelt scrap ingot. As compared to 2019, however, exports to Malaysia increased 44%. And Malaysia's share of total aluminum scrap export demand from the United States has increased from just 4% in 2016 to 23% in 2020. Over this corresponding period, China's share of our aluminum scrap export demand has declined from 51% to 8%, even though, of course, China remains the major economic driver for the region and the ultimate source of demand for so much of the metals and raw materials in general. This just shows the trend in nickel, lead, and zinc scrap exports from the US last year. Obviously, the volumes are considerably lower than what we're seeing on the copper and aluminum side of it. But just FYI, nickel scrap exports were down last year, largely on decreased Canadian demand. We did see an uptick in lead scrap exports from the United States based on shipments going up to India. And last but not least, zinc scrap exports were down last year, largely because of diminished demand in Taiwan and Hong Kong. Obviously, lots of speculation about what's happening with trade with China. As I indicated, we are hearing reports of high quality copper and aluminum scrap still moving to China. We haven't heard much in terms of increased ferrous scrap shipments, but with new standards coming into place for the ferrous scrap, a lot of market participants are talking about the potential for increased ferrous scrap shipments to China as they increasingly shift to electric arc furnace production. But the trend, as shown in this chart, pretty clear, especially on the volume side. where we're going to see continued significant drops, especially on the non-metallic side, as the scrap import restrictions came into place in January on what they designate as waste, and having disproportionately large impacts on recovered paper and fiber and plastic scrap shipments. We also saw decreased demand largely for India last year. COVID obviously had a big role to play in that, and some of the port closures that we saw there. I think with the exception of paper, the expectation is that we could see a rebound in metals demand from India this year. And then I don't want to bore you with all of the various export statistics, but one market that I did want to highlight is Malaysia, where again, because of the need to fill the shortfall in demand from China, we've seen just a remarkable surge in the volume and value of all scrap exports from the United States to Malaysia, which is what the chart on the left shows. So just to sum that up, over the last 5 years, US scrap exports, that includes all commodities, not just the metals, to Malaysia increased from a little over 150,000 metric tons in 2016 to over 2.6 million metric tons in 2020. On a dollar basis, our exports to Malaysia were $95 million in 2016. Last year, there were 1.25 billion with a B. Pretty remarkable. This is the trend in US copper scrap exports to Malaysia, which again, were down last year, but still show a remarkable increase over the last 5-year period. So for example, in 2016, we shipped about 2,000 metric tons of copper and copper alloy scrap to Malaysia. Last year, that was about 177,000 metric tons. And this is the breakdown of our copper scrap exports to Malaysia by bare bright number 1, number 2, and all other copper and copper alloy scrap, which is clearly the vast majority of what we're sending to Malaysia. Just a quick recap of aluminum scrap import demand from Malaysia, a similar story. US aluminum scrap exports to Malaysia rose from just 54,000 tons in 2016 to 418,000 tons in 2020, valued at $450 million. And the expectation is that the Malaysian economy is going to continue to grow quickly, even outstripping the growth in other Southeast Asian economies, which have also been sources of increased scrap metal demand. The IMF is projecting that the Malaysian economy will grow over 7% this year, again, faster than some of its neighbors in Southeast Asia. Okay, so that's the export side of the equation. Just quickly on the import side, the vast majority of what the United States imports, in terms of, this is all scrap, but it's mostly scrap metal, and the majority of that is ferrous scrap as well. But total scrap imports into the US, all commodities, were up 5% last year. Not surprisingly, Canada and Mexico accounted for more than 80% of all the scrap imported to the United States. By commodity, ferrous scrap imports accounted for nearly 70% of everything we brought into the country. And again, those were up 6% year on year. All right, so even as some of the trade flows, certainly the imports were up last year, ferrous scrap exports held their own last year. Transportation issues, not surprisingly, continue to be a massive headache for US scrap processors and brokers and exporters. The container shortage and problems along the coasts with increased, not just costs, but with decreased container availability, difficulties moving that material back across the Trans-Pacific routes has been particularly difficult, given the disparity in container and shipping rates moving from Asia to the United States, which are extremely high, to relatively low values for movement of material going back across the Pacific. And so that has contributed to real problems in the container sector. But also we continue to experience issues on the trucking side of it as well. And I don't know if any of you were able to join us for a webinar that we had on, that ISRI had on trucking late last year, where we had Bob Costello from the American Trucking Association talk about a variety of things, including the truck driver shortage situation, which unfortunately isn't expected to get better anytime soon. The American Trucking Association's expectations are that that truck driver shortage is going to continue to grow actually through 2028, as shown in the chart here. All right, so those are some of the major things I think that are happening and impacting the metals markets. Just to kind of summarize some of the major themes for recycling in this year, and then happy to take any questions you might have. COVID concerns certainly still the largest source of uncertainty with new strains and extremely large numbers, unfortunately. But on the positive news, the rapid rollout of vaccinations, I think has helped, again, raise some analyst forecasts for economic growth in the US. There are concerns certainly about the potential for higher tax and regulatory costs this year. But again, commodity prices have certainly been trending higher, sharply higher for the metals on the back of positive manufacturing reports from China and other developed economies, which, all of the things being equal, should be good for scrap demand this year. Manufacturing PMIs are showing moderating growth, but still positive growth. There are some leading indicators which have been less positive for sure when you look at some of the numbers on consumer confidence, some of the housing market data. There's concern that we might hit a little bit of a slow patch, even as the economy overall is expected to grow significantly this year. For recyclers, capital investments and other efficiency gains have lowered certain risks, but again, supply constraints, labor shortages, transportation hurdles, regulatory costs, and some trade restrictions are still of significant concern. In terms of the legislative front, I think it would be fair to say that there's been increased legislative scrutiny at the state and local levels, and that's expected to remain a key feature for recyclers this year. But I think the overall trend is positive, not just in terms of business sentiment, but I think in terms of the attitude towards recycling more broadly. We have seen traction in terms of people's concerns about sustainable development and the role that recycling really does play in environmental protection and in conserving natural resources, reducing emissions, and of course, feeding the materials that our manufacturing base needs to stay competitive. And then from ISRI's perspective, just to wrap up, education remains critical, both for the public, but for policymakers, the press, and other stakeholders to talk about the benefits of recycling, and then to also emphasize that it's really a shared responsibility that continues to require collaboration across the public and private sectors. So that was my presentation for today. I hope it provided some useful information. And Wayne, do you want me to stop sharing my screen, or how would you like to proceed?
Do you have a slide with your email on it?
Oh, I do. That's the last one. There you go.
Good. Yep, good. Because that's we had a question about emailing you for the market update. So
oh, sure.
So there it is, folks. If you want to get the regular updates from Joe on the markets, you can do that. So as always, very comprehensive update of the metals markets. Joe, appreciate that.
Sure.
So we're now going to field some questions for Joe. So if you do have a question or comment, use the Q&A feature on your control panel. While we're waiting for some questions here, I have a couple questions here. The slides that showed Turkey and Malaysia, they really popped out as far as the large export numbers. How do you explain that those numbers are so high? I know that Malaysia, you mentioned the economy
Right.
is doing well. What do you attribute that to?
Yeah, so I mean, for Turkey, they've been our major export market for ferrous scrap for a number of years now, and part of that has to do with the fact that most of their steel production comes from electric arc furnaces, which run off of scrap almost entirely, and their domestic supply of ferrous scrap isn't sufficient to feed those mills, and so they're heavily reliant on the imports of scrap. And the U.S. is their most important single supplier of ferrous scrap. And in turn, the U.S. has typically been Turkey's most important export market for steel. So it's been that kind of relationship. In terms of Malaysia, I think the biggest part of that is the fact that China stopped importing a number of scrap commodities. And one, those commodities needed a home. And two, I think in some instances, they're able to be reprocessed within Malaysia because even though its economy is growing very fast, that doesn't mean that it's necessarily consuming everything that we're shipping there. In some cases, it's being processed into a higher quality for shipment to other final destinations. Does that help at all?
Yeah.
And by final destinations, I mean China.
It looks like trucking is going to be an issue, not just short term, but for the long term. So I guess the question is, as far as an alternative, is something like rail going to be increasing? Or do you see that as a possible alternative to the trucking issue?
Well, unfortunately, it's been a transportation kind of nightmare across the board. So it's not like rail conditions have been great either. Rail's actually been was a real sore spot for a lot of shippers in 2021 and continues to be. And so for some who have rail access, that's an option, especially for longer shipments. Trucking tends to be used more intensively for some of the shorter hauls. But even still, whether we're talking about, unfortunately, I wish I had better news, but whether we're talking about rail, truck, barge, or a container, the situation is still extremely challenging, put it that way.
Okay, I have a question from an attendee here. Why the difficulty in getting workers in the scrap industry when unemployment rate in the US remains relatively high?
Yeah, that's a very good question. Part of the reason is that the scrap industry has to compete with a lot of other industries for a relatively competitive pool of employees. And so that in and of itself raises challenges, especially when, to be perfectly honest, not everyone prefers to be working outside or in a yard as compared to in a retail operation or in other parts of our economy. So it's heavily competitive to bring folks in, and then it's also difficult to retain them as well. Even though you're absolutely right, we did have a spike in unemployment, but those market conditions are gradually improving. But even pre-COVID, it was still a very difficult labor market for scrap recyclers.
Okay. I don't have any more questions right now, but someone raised their hand. That I'm going to allow them to talk here, see if they can.
Okay.
You can do the question. Scott Teal, are you on? Are you on right now? You can talk if you want. Guess not. Okay.
Okay.
Any more questions? If not, we're gonna wrap this up. So again, this webinar, like all the webinars in this series, has been recorded and will be made available via YouTube links on both the National Recycling Coalition and Recycling Market Center websites. Thank you again for joining us, and we hope you'll join us for next month's webinar. So please visit the NRC and RMC websites for scheduled updates. And thank you again, Joe, for taking the time out to provide this update. And hopefully we can do this again maybe next year or
Yeah, that would be
sometime.
great. It's my
Yep.
pleasure. And like I said,
Yep.
if anybody has any additional questions, feel free to reach
Yep.
out.
Yep. Good news is we'd like to report that. So I really appreciate that.
Great.
So thank you very much and have a great day, everybody.